Hello everyone, this is Jotak from MarketSmith India. In this video, I'll be talking about the Cancellation investment methodology. Cancellation is an acronym where each letter stands for an important factor that an investor should be looking for in a stock before he or she decides to invest in it. Cancellation is a growth stock methodology that is a blend of fundamental and technical analysis. The strategy aims to find good quality growth stocks just before they make their major price advances. The strategy was formulated by one of the most successful investors of all time, William ONeal. And before we move on to the details of what is Cancellation and the history behind it, please go through the disclaimer once. Okay, so William ONeal, the founder of Cancellation methodology, he quite effectively practiced this strategy from the beginning of his career and turned $5,000 into $200,000 in no time, very early on in his career. And with that money, he bought a seat on the New York Stock Exchange, thereby becoming the youngest person at that time to own a seat on the NYSE. William ONeal is the founder of Investors Business Daily, which is one of the most successful financial newspapers in the US. In fact, the second most read financial newspapers in the United States. William ONeal is also the founder of MarketSmith, which is a well-established investing tool used by investors in the United States. MarketSmith also has investing applications for the Hong Kong and the Indian market. He's among top 20 greatest investors of all time. So that's about William ONeal, the founder of Cancellation methodology. Right, how did he achieve all these things? Well, at the very beginning of his career, he asked a question to himself that what do the best stocks look like just before they make their biggest price moves? And in order to answer this question, he undertook a detailed study of all the past stock market winners, and he studied every market cycle and the top performing stocks in those market cycles, whether bull run or a bear market. And what he tried was he wanted to find out what was common between all those top performing stocks. Well, he found 7 common characteristics, and that is how he developed the Cancellation investing system, where each letter in Cancellation stands for one of those 7 common traits in the top performing stocks. Okay, so let's get into the thick of things. C stands for current earnings. So what investors should be looking out for is strong double-digit earnings and sales growth in the most recent quarters. This could be in the range of 20 to 25%. The higher the better. And in addition to strong double-digit sales and earnings growth, accelerating quarterly sales and earnings growth is also something which investors should be looking out for. This is very important for any company. When you have a company growing at a strong rate, that is what is going to take the stock price higher, because big accelerating earnings is what attracts large institutional investors, and that is something which always is going to take the stock price northward. Right, so next up is A, which stands for annual earnings. So similar to current earnings, look for strong double-digit sales and earnings growth over last 3 years. This is also important because a company might be able to boost its earnings or sales by cutting costs, or maybe there's a major contract win because of which we have good growth in current quarters, but we might not be sure whether the growth is going to be sustainable in future. So if you want to see more consistency, it is better to look at the sales and earnings growth over the last 3 years, and which might give a better view of sustainability. And also look at companies that have return on equity of at least 17%. William O'Neill, in his research of top performing stocks, found out that all those stocks had a return on equity of 17% or higher. Okay, so that sums up the annual earnings part. Next is N. N stands for new. New could be new product or service, new management or industry trend, or even a stock making new high. So when you have something new that could impact the fundamentals of a company going forward, that is something which should be closely looked at. Mainly it's going to be a new product or service that is expected to have a strong demand for it, and that is something which usually has a strong impact on the company's financials. Besides, it could be a new CEO who is joining a company, and the CEO comes in with a great track record of managing businesses. In the past, he or she was able to cut costs effectively or drive sales higher. So that is something which could turn out as a positive for a company. It could be a new industry trend or regulation that could provide tailwind to a particular company. Also, if a stock is making a new high, closely look at it, because a stock does not make a new high for no reason. There could be some reason why it is making a new high. It again could be because the industry trend looks positive, there is something changing, a new regulation is into effect, which is going to have positive impact on a company's financials. So these are the things that one should look at new. And N is something which is very important in the Cancellation system, because this is something which ultimately generates solid earnings growth in the future. So we can talk about innumerable examples when it comes to N. For example, Apple introduced iPod, and that was a game-changing event for the company, and it had a huge impact, positive impact on its financials post the launch of iPod. Great. Next we have is S, which stands for supply and demand. So in supply and demand, you would want to look at stocks that are having huge demand for it, whereas the supply is not too great, because that is what is the forces of demand and supply is actually what makes the stock price move. So when you have a strong demand for limited number of shares available, that is going to push the stock price higher, and when there is oversupply and demand is not that great, that might lead to the stock price decline. So look for stocks that have strong buyer demand, and with the MarketSmith India application, you'll be able to find proprietary ratings that cover these things for you in an easy manner. So you'll be able to notice whether a stock is undergoing heavy volume accumulation, whether it has strong buyer demand or not, and that will give you an idea whether S for that stock is strong or not. All right. So we have covered first 4 factors in the Cancellation investment methodology. Next we move on to L, which stands for leader or laggard. So in L, you should be looking out for stocks or companies that have market leadership position. This is because generally when we talk about market leaders, those companies tend to have strong sales and earnings growth rates, and they have leading profit margins. So it's better to be concentrating on those companies that have market leadership position. And not only that, the company should be leading in terms of fundamental, it should be leading in technical terms as well. So you should be looking out for stocks that are within the top 40-50 industry groups. Again, you'll be able to find whether a particular stock comes in the top 40 or 50 industry group using the MarketSmith India application. And in addition, price strength is something which is very important when we talk about technical strength. So 80 or higher relative strength ranking is something which you should be concentrating on. Relative strength measures the performance of a stock in the last 12 months compared to the overall market. So 80 or higher relative strength rating means that the stock has outperformed 80% of all the other stocks and it comes in top 20 percentile. Now L is important because biggest market winners, they tend to be the fastest growing leaders in a strong and rising industry. Next up in the list is I, which stands for institutional sponsorship. So in this factor, what you should be looking out for is whether a particular stock is owned by financial institutions or not. If the stock does not have the backing of financial institutions, it usually means that it is of lower quality in nature and the chances of it going higher are lower than usual, because when institutions, they are not owning it and when they are not coming into the stock, it becomes difficult for a stock price to move up. So you should be on the lookout for stocks that have seen increasing number of funds owning them in recent quarters. Also, ownership by funds that have outperformed the market will certainly add to the confirmation that a particular stock is good. Institutional sponsorship is simply the ownership of stock by mutual funds, banks, pension funds and other large institutions. And this is very important because what happens is when these big boys, they go out and buy stocks, it usually takes the stock price higher. Right, so that completes the institutional sponsorship part of Cancellation. Next is the final and the most important factor in the Cancellation investment methodology, M, which stands for market direction. So what happens is the MarketSmith India research team, it categorizes the Indian market into 4 different conditions based on the movement of a key index such as the Nifty 50. So as an investor, what one should be doing is making new purchases only when the market is looking strong, market is in confirmed uptrend, and if in case the market begins to weaken and it goes into uptrend under pressure and downtrend, that is when investors should be a bit careful. They should exercise some caution and take defensive action if the market shows signs of weakening. This is because 3 out of 4 stocks, they move in the same direction as the general market. And the good thing about market direction is it helps you in timing your buy and sell decisions. You'll be able to find the market direction for the Indian market in the MarketSmith India application. So that covers all the factors of the Cancellation investment methodology. You can download the MarketSmith India application on Android platform. It is available in Google Play. I'll be taking you through the application in a separate video. Thanks for watching this video.